Welcome back to BitcoinDorks, your daily source for cryptocurrency updates and market insights. Today, we have some exciting news from Hong Kong as an analyst reveals plans to greenlight in-kind Bitcoin exchange-traded funds, ETFs. Stay tuned as we delve into the details of this significant development and its potential impact on the crypto market. Recently, an analyst shed light on Hong Kong's intentions to approve in-kind Bitcoin ETFs, marking a significant milestone for the cryptocurrency industry. This move is poised to provide institutional and retail investors alike with easier access to Bitcoin investment opportunities while offering increased liquidity and price discovery in the market. In-kind Bitcoin ETFs differ from traditional ETFs in that they allow investors to directly own Bitcoin without having to hold the underlying asset themselves. Instead, authorized participants contribute Bitcoin to the ETF, which is then held in custody by a trusted third party. This structure not only provides investors with exposure to Bitcoin's price movements but also offers the potential for tax advantages and improved liquidity compared to physical Bitcoin holdings. The approval of in-kind Bitcoin ETFs in Hong Kong represents a significant step forward for the global crypto industry as it signals growing acceptance and recognition of Bitcoin as a legitimate asset class. With regulatory clarity and investor protection measures in place, these ETFs have the potential to attract a broader range of investors, including institutions, pension funds, and retail investors, who may have been hesitant to enter the crypto market previously. The introduction of in-kind Bitcoin ETFs is expected to have profound implications for Bitcoin's price dynamics and overall market behavior. These ETFs serve as a regulated and accessible investment vehicle for Bitcoin, providing investors with a convenient avenue to gain exposure to the cryptocurrency without the complexities of direct ownership. As a result, the approval of such ETFs is anticipated to significantly increase demand for Bitcoin among institutional and retail investors alike, driving up its price over the long term. The presence of in-kind Bitcoin ETFs in the market is poised to enhance liquidity and price discovery mechanisms within the Bitcoin ecosystem. With ETF trading, investors can buy and sell Bitcoin shares on regulated exchanges, thereby increasing the overall trading volume and liquidity of the cryptocurrency. This heightened liquidity not only facilitates smoother and more efficient market operations but also reduces price volatility by narrowing bid-ask spreads and minimizing slippage. The introduction of Bitcoin ETFs could lead to greater stability and maturity in the Bitcoin market as a whole. As institutional investors and traditional financial institutions gain exposure to Bitcoin through regulated ETFs, the market is likely to experience a gradual shift towards more sophisticated investment strategies and risk management practices. This influx of institutional capital brings with it a level of professionalism and market discipline that can help temper the wild price swings and speculative behavior often associated with nascent asset classes like Bitcoin. The availability of Bitcoin ETFs not only broadens investment opportunities but also enhances portfolio diversification and risk management strategies for investors of all types. By integrating Bitcoin ETFs into their investment portfolios, investors can tap into the potential growth of Bitcoin while simultaneously hedging against the inherent risks associated with traditional asset classes like stocks and bonds. This diversification strategy is particularly advantageous for individual investors seeking to optimize their risk-return profiles by spreading their investments across multiple asset classes with varying levels of correlation. For individual investors, incorporating Bitcoin ETFs into their portfolios can serve as a hedge against market downturns and inflationary pressures, as Bitcoin has historically demonstrated a low correlation with traditional financial markets. During periods of economic uncertainty or currency devaluation, the decentralized and limited supply nature of Bitcoin can act as a store of value and a hedge against systemic risks, thereby preserving wealth and purchasing power over the long term. Similarly, institutional investors can benefit from the inclusion of Bitcoin ETFs in their investment strategies as part of a broader asset allocation framework. By diversifying their portfolios across different asset classes, including Bitcoin, institutional investors can reduce overall portfolio volatility and enhance risk-adjusted returns. This approach allows institutional investors to allocate capital more efficiently and optimize their portfolio performance across various market conditions while also meeting their fiduciary responsibilities and risk management objectives. The availability of Bitcoin ETFs provides institutional investors with a regulated and liquid investment vehicle for gaining exposure to Bitcoin, eliminating the need for direct custody and management of digital assets. This accessibility and convenience make it easier for institutional investors to incorporate Bitcoin into their investment portfolios without the operational and regulatory complexities associated with traditional cryptocurrency custody solutions. The integration of Bitcoin ETFs into investment portfolios represents a significant advancement in the democratization and mainstream adoption of Bitcoin as a legitimate investment asset. by offering investors a regulated and accessible way to gain exposure to Bitcoin's potential upside while managing risk. Bitcoin ETFs play a crucial role in expanding the investor base and driving liquidity in the cryptocurrency market. Despite these challenges, the potential benefits of in-kind Bitcoin ETFs are significant, offering investors a regulated and efficient way to gain exposure to Bitcoin's potential upside while mitigating some of the risks associated with direct ownership of the cryptocurrency. In conclusion, the revelation of Hong Kong's plan to approve in-kind Bitcoin ETFs represents a major milestone for the cryptocurrency industry, signaling growing acceptance and recognition of Bitcoin as a legitimate investment asset. With the potential to increase liquidity, price discovery, and institutional participation in the Bitcoin market, these ETFs have the power to reshape the landscape of crypto investing and accelerate the mainstream adoption of digital assets worldwide. That's all for today's video. Make sure to like, share, and subscribe to BitcoinDorks for more updates on cryptocurrency news and market developments. Until next time.